Alright, good morning everybody. Hope y'all are doing well. Just making sure everything's working real quick. Alright. Alright, I hope everything is working now. Hopefully. Seems like it is. So we'll just go ahead and assume that it is working. Alright guys, so as always, right, this is our weekly review or weekly prep call. So looking at the news, see that Monday we have a Fed speech. It's NFP week next week. So you know what that means. That means you gotta chill, right? You should preferably be done trading by Wednesday, New York session, or the end of New York AM session, right? So definitely look to try to do your engagements around that time. It'll probably be what's best, because yeah, it could get crazy. You guys have seen me, well, at least my private community, and I think some of you guys as well on the YouTube channel have seen me trade NFP weeks and done fairly well. But again, it's higher risk, very much something you have to consider. And, you know, just be patient. Don't force anything. Make sure that you are, you know, just being very cautious because you don't want to do anything stupid, right? You don't want to cause any problems that are avoidable, right? So all right. So yeah, we see the news. So we'll get that out of the way. Sorry, I have lots of stuff going on this morning. But yeah, so considering what the news looks like this week, it should be a very volatile week. So that should be fun. Again, you want to be very patient because it's NFP week. We have a Fed speech on Monday, so that may send off some fireworks. So definitely keep that in mind. Sundays, we never trade anyways. Remember Power 3, right, as a pretext to us diving into this analysis. Power 3 happens on a weekly basis, on a monthly basis, inside the daily ranges, inside the weekly ranges. So with that being the case, this may cause the manipulation going into Tuesday, or it may just be very slow, not really do much. And then towards, you know, kind of the end of the week, we may start seeing some fireworks take place. So yeah, we'll keep that in mind. Unemployment claims, this should be a fun day, potentially, depending on obviously what's set up throughout the first initial part of the week. Remember Sunday's open price. Remember new week opening gaps. Keep tabs on new day opening gaps. And obviously, like I mentioned, keep tabs on what news events are taking place on whatever day you elect to engage in or attempt to engage in. All right, so moving along, And just make sure I got all the things that I want. Yeah, I got everything. Okay. So take the drawings off that real quick. This is the weekly chart for the bonds. Okay. Remember, those of you that have been with me for a while, those of you that are veteran ICT traders, those of you that study any of ICT's fundamental analysis in any capacity, have most likely stumbled across the bonds and yields. And over the last couple of months on YouTube, when I've been going live, I showcase this exact process pretty much on a daily basis, where we basically dissect the news, then we go to the bonds and yields, then we go to the currencies, then we go to the DXY, then ultimately we end up at the indices. Okay? All of that analysis allows you to have the upper hand in terms of defining clarity and finding clear ideas that are supported by actual evidence of market relationship, fundamental analysis. We also use seasonality as well, so which we'll dive into a little bit today. And then we also, have talked about at the end of the month what that generally brings, especially since we are now at the beginning of, or we're at the end of this current month, going into the beginning of the next month, which pretty much allows us to really look into the seasonal influences, and then also COT. I won't be doing COT today. I'll probably do it with my private community. But if you are interested in getting a COT report analysis, you can DM me on Instagram and I will send it to you personally. But it's a long-term view because we're also inside of a new quarter. That's also something I mentioned in the previous calls. It's also something you want to keep tabs on. Quarterly timeframes, the 3-month timeframes, also allow for SMT, or not SMT, but it allows for Power 3 to be observed in a quarterly time frame. That's going to be the 3-month chart, which is like this here, right? So each of these candles are new quarters. So it's like a quarterly high, quarterly low, right? So you can, and it's a quarterly order block, for example. So that's something you want to keep tabs on long term if you're trying to really nail down higher time frame or quarterly analysis, and get a feel for what the whole quarter could potentially do to further justify a particular narrative on that daily, weekly, and monthly time frames. Okay, so we looked at the news. Now we're on the bonds. So we're on this weekly chart here. Let's go to the monthly, actually. Start there. We could see that a significant monthly high was taken. Significant previous month's high was taken as well. We could see the price was bearish overall until this has taken place. It looks as though it may continue, right? This could be a run on stops. Okay. Shift in market structure, and if price retraces, we may be looking to seek the equal highs up here. That looks pretty obvious if I do say so myself. It's also at this order block. So again, run on stops, shift in market structure. We got to see what this is going to do above this high. Is it going to close better or more meaningful above this high, or is it going to just sweep this and then start dramatically dropping lower? Now we have this order block. We have this volume imbalance. Okay, so if price does retrace, we'd like to see those areas hold from this monthly perspective. And if that is the case, then obviously, like I mentioned a second ago, we have this volume imbalance. We have these equal highs here, which translate across the 3 indices. I mean, the 3 bonds here, the 10-year, 30-year, which is this one, and then the 5-year. This also, just to review, dictates in many cases what the indices are going to do and what the currencies opposed to the DXY are going to do, all right, versus the yields, right, which is this market here, the 30-year, 10-year, and the 5-year, which dictates generally what the DXY is going to do, okay? Again, we go over the same process every week in the hopes that you will grasp this and go into each week, each month, each quarter, each day, considering this process. I go over it continuously. And this is, for those of you that have spent any time with me, and have seen the consistency that I provide, and some of my students who also emulate, you'll see the importance of this, and even in the last 2 weekly reviews, you can clearly see when I do this breakdown, the relationship. You could see the impact, and it can't not be overstated. And you cannot be lazy thinking that you're just going to watch the S&P or the NASDAQ and you're just going to magically become profitable and have clarity. That's the whole point of this, of these live streams, of my presence on YouTube, is to build clarity in those of you that are willing to give me your ear. Doesn't matter how many people subscribe, doesn't matter how many people show up. If there's one person that I can continuously impact, then it's all worth it. And that's the whole point, and why I'm here, and why I do what I do, versus going and just doing things on my own to myself, and then just living my life, right? But yeah, so I hope that you understand the relationship that the bonds have on the indices, the currencies, and what the relationship is with the yields, which again is this market. What impact that has on the DXY. And if you flip back and forth, you could see the reverse correlation essentially. They are kind of moving slightly similar, but if we zoom out a little bit, you can start to see these have been more bullish than the yields. Okay, and that's been impacting the indices and the currencies, and it's pushed them higher. And the DXY, as a result, has also seemed to want to be very bearish as a result of that. Okay. Again, some may take this analysis process as being boring because I'm not calling out trades, but like I always mention, the boring things are going to get you to success. It's not going to be one-hit wonders. It's not going to be just watching one market. If you want to be a well-rounded trader, it requires multiple skill sets. Which is another thing that I heavily endorse, and I heavily try to go over in terms of each element. So those of you that do want to listen, and those of you that do take this and you're trading serious, you're able to have a bunch of tools that are very useful and can be proven just off of a week of analyzing, or just one live call of just studying the analysis. Like it's very easy to see it if you have the capacity to sit and listen, and then just go discover things on your own based on what is exposed to you guys. All right. So again, looking at the bonds, it looks like we are above this high. It has taken that, so it's not unreasonable for them to want to drop lower, especially if this does end up being bullish for the further weeks, right? In the coming weeks, coming days, coming month. It wouldn't be surprising if they drop lower, because it is a new quarter as well, for them to drop lower into something like this. Let's go to maybe let me go add a 2-month chart. Maybe we could see something else that's interesting. Right, so we see this order block here as well. We have a fair value gap in there. All right, so then we drop down to the monthly time frame. Right, we have that also in conjunction. So we have overlapping order blocks here, overlapping gaps in there. So that may be significant. Again, if price takes this buy side, which it did, and it comes off of it and retraces. Now, if we were to break down below the midpoint of this order block and just close below it, then obviously the target would then transfer down to this low, and then obviously to this low as well. That would impact the indices and drag them lower if it does want to do that. Or it should, right? And if we see that, then the market is symmetrical, which then sets the stage. In terms of symmetrical market, it sets the stage for high probability one-sided directional moves. Okay, so again, that's another element to clarity, is understanding the relationship. That's why we talk about this process every week, and I try my best to highlight each element, although it may seem kind of boring at times. It is what it is. There's other things that are more painful than highlighting the boring things that are actually effective when it comes to trading. The boring part and nerve-wracking and mentally draining aspect of things has to do with you continuously doing the same stuff, trying to cut corners and just literally flaming your account every week or every day and pissing yourself off, or just, being in a constant state of stress because of the fact that nothing works, when you can just make these little adjustments, focus on the right things, and don't be stubborn, and see the results as a result, right? So yeah, the opinion of this getting above this high, possibly retracing, we're going into this new month, sets the stage for power 3 potentially if we are going to be bullish. Again, invalidation is if we break through the gap here. If we switch through this low and then close below the midpoint, that's 3 PD arrays to the downside, which would then further confirm my opinion that it would go down there if that does take place. But for now, I'm going to assume the price is going to want to try to reach up for this high. Again, we have this high here. That's a previous month's high, monthly high. So these are large, frothy liquidity pools. So if we do prove that we want to stay above this high, maybe pull down a little bit, hit this gap in this order block, potentially a high resistance, a high probability zone or area in terms of price wanting to go higher. If we do pull down there and give a reaction, then again, we have this high, and then these equal highs, and then the rest of this gap here as a potential target. If we go to the 2-week time frame, we may be able to see some further context potentially. Go to the weekly. See a little bit of a fair value gap in there. I think I have it. Yeah, I have it highlighted already. So that's something I will continue to monitor as well. Something you should also continue to monitor on top of this order block here. Remember, these down candles here from this monthly time frame, that is our bullish monthly order block. Okay, so that, in my opinion, if price does come down there, would be reasonable, especially because it's the new month. We're going into a new month and it's NFP. I wouldn't be surprised if they try to drag it down there, especially if they end up trying to go higher eventually. So that's something that we're trying to monitor here. Okay. Monthly order block. But again, if you guys have any questions, as always, definitely leave them in the chat so then we can have a discussion about them. Or, you could always DM me if, you don't like being in a public forum type environment. That's the whole reason why I'm here. Like I keep saying, I'm here to help you guys. I'm not here to just toot my own horn. I could easily do that. But yeah, it's, making sure you guys have tools and have the ability eventually, if you do choose to listen, eventually have the ability to be profitable is the goal, So yeah, going back down to this weekly, after we have this outlined, the line in the sand again is going to be from high of the order block to low, the midpoint. Okay, so this would be our final invalidation. Now, if price starts sliding through these levels too aggressively, then obviously that is cause for concern, or cause for us to at least analyze and understand that it's not ready to go higher yet. Right now, we're inside of a level that should be able to present us with a pretty decent move to go higher from here. But again, it's the start of a new month in like a day or so. So I wouldn't be surprised if they try to get down below that, maybe sweep out this liquidity going into that volume imbalance I mentioned on the monthly chart. Then at that point, we can anticipate if it does push higher, it may be a reason for, or a level that, price uses as a reason to go higher after taking stops in that area, right? But we have taken out stops here. So again, the retracement, given the fact that this is a significant PD array that's been violated, the likelihood of it doing what it's doing here, retracing into some form of a discount array because it's been running higher and it took out this level, is totally permissible and should be expected, right? This is price navigation and price behavior that is continuously occurring, once we take out significant liquidity pools. It's a very common thing, so it's something you want to continuously observe when you see price taking liquidity at previous week's highs, previous week's lows, previous month's highs or lows, previous day's highs or lows. You want to consider the retracement factor, and then what should it retrace to, right? it should retrace. If we're bullish, right, if it's going higher and takes a high or something like that, we want to see it return back to a discount array of some kind, because price takes out liquidity and wants to come back down to a better price for smart money, or to a discount, or however you want to look at it. And then once it gets to those levels, then it could end up being time for it to then start to continue. Otherwise, it'll be in a counter trend capacity, which we talked about in one of the previous videos I did recently. If I can remember correctly, it was 3 weeks ago. It's called Counter Trend Trading Secrets. So definitely go check that one out if you have interest in counter trend trading logic and how to go about that. Okay, so yeah, I'd like to see us continue to do this, stay above the midpoint of this order block, stay above this one as well, continue to go higher. If it does drop lower, it gets below this low, I'm still not totally confident or convinced that it's going to go lower. We do have a shift in market structure here all the way up to this monthly time frame, right? So it's got run on stops, shift in market structure. Sorry, I'm observing some type of SMT. If there is any present, there's none present. So that would be more indicative of price continuing to go higher, right? Just another layer to trusting it potentially having a meaningful run higher. Right now, I'm assuming that it is, because we have this shift in market structure. It seems like it's now stalled out. It's kind of turned against it and shifted order flow. And we're also in a new quarter, right? So I wouldn't be surprised if that continues, because it's been so bearish. And again, bonds will drag the indices higher. It'll continue to push indices higher if it does choose to go higher, right? And then DXY would drop if the bonds choose to continue to drop lower. We've called for this low as well for weeks. And then obviously you can see now that price has fulfilled that. If you go back on the live calls that I've done throughout the year, you'll see within the last couple of weeks, I've been calling for price to want to go lower here. Now we've done the opposite of what the bonds are doing. DXY, or the yields, are retracing into this order block, and if it stays below that, we have a low here. We have this previous low here from previous week, and then we also have these relative equal lows down here. Okay, and we do have a fair value gap in here that may get returned into. If we are going to be really bearish for this, I'd like to see us again stay below this order block here. We do have equal highs here. I wouldn't be surprised if it does choose to want to run up there and take that out. That would then turn DXY bullish a little bit and possibly drag the indices lower also as a result of that. So just some things to keep in mind. I do assume that price is going to use this as a area of resistance. If it stays below that, to then continue to target the low here, and then possibly these lows, possibly fair value gap down here. And again, that will drag DXY into a particular direction, in this case bearish. That's why we spend so much time with the bonds and yields before we end up going to the currencies and stuff like that and the indices, because again, this is clarity here. This is you understanding the overall sentiment and understanding a deep analysis in terms of why price should do something or shouldn't do something, because that's a critical question. Why is price going to do what you assume it's going to do? Well, that's exactly what we're learning here. That's exactly what we talk about on a continuous, weekly, and in my private community, a daily basis. All right? So yeah, that's my thoughts on the bonds and yields. Okay, I'd like to see this go higher. Potentially like to see this one use this as resistance and go lower. Again, I wouldn't be surprised if one of these runs up, takes out the equal highs here, and then one possibly presents us with an SMT, right? If they all just smash above this and show zero respect to it, then obviously that may change things. But for now, going into the new week, I'm assuming that this is going to hold. I'm assuming this was just like a retracement to then potentially continue to drop lower. Again, we took out significant low here, so there's a retracement. If we go up to this, it's taken out a high. It's got the same exact thing taking place for a retracement. So now we're in a position to observe this potentially going higher, maybe attacking the rest of this fair value gap and the high here and the high here as well. Okay, so again, bonds dictate generally where the indices and currencies are going to go. The yields dictate where the DXY is going to go. Okay, so that's my thoughts on that asset class. Moving on to the currencies, we could see how if we go to the weekly time frame, 2-week time frame, we could see how this has just been continuously marching higher. I've been calling for higher currencies in my private community, as well as in the previous forecast, and also in the counter trend trading video, right? So definitely go check that out again if you haven't already and want to learn how to counter trend trade. But yeah, so this still looks like it wants to continue to go higher. We have a very obvious equal high here. Why is this equal highs? Because this here is a weekly candle high, and this is also a high, and now we have these equal highs here as well. So the sentiment hasn't changed, and if this is going to go higher, we'd like to see the bonds go higher. Similar to if the bonds are going higher, we want to see the indices go higher, right? The bonds dictate where the currencies like these two are going to go, and then it also dictates where the indices are going to go. So that's, again, why this is so important to understand. So again, if that's going to be the case, I'm going to continue to want to see this march higher. We have a high here. These consecutive up candles, I'm assuming, is some form of an order block. So if we can get above that midpoint, that'd be great. That'd be what we'd want to see. We do have an order block here. You can see how this pulled down into these consecutive down candles, which is an order block and a fair value gap. And the response from that has been pretty beautiful. There is a slight SMT at these highs, but I don't think that's going to survive, especially if the bonds continue to go higher. So we're going to continue to monitor that as well. This order block here we want to watch. This down wick midpoint we want to watch. Similar to this, we want to see this order block and this midpoint respected. It wouldn't be surprising if they do try to pull back into it, because power 3 at the start of a week generally goes opposed to what it's going to overall do. So that's what I want to see in the currencies, right? So I want to see potentially this go down to go higher, possibly target this high, possibly target this high as well. So yeah, if the bonds and yields stay the same, that's my assumption on the currencies. Going to the indices now. Take off some of these drawings. Okay, so this has a very obvious SMT. Okay, so if that SMT holds, it's going to be supported by the bonds just taking this high and then smashing through the low here, as I mentioned earlier. And then obviously that fair value gap that we talked about, or the volume imbalance here, right? If price does slice through that and just tank, that'll be some evidence that we may end up seeing the indices turn around off the heels of this SMT. I don't fully trust that that's going to take place until we have further evidence, but that's just an observation we must keep tabs on. We also have an order block here to watch. If we go to the 2-week, it's even more apparent, right? So we want to observe how that order block is going to be in terms of responsiveness. We also have a volume imbalance, an inversion fair value gap here as well. We have to keep tabs on. Okay, so fair value gap here. Okay. So let's say weekly. So yeah, it's another level of potential interest to see price supported and go higher. So with the context of everything that we've already discussed, you can start to see how now when you come up into this asset class, or if you go into the currencies after the bonds and yields analysis takes place, you can start to see a more reasonable picture, more clarity at the end of the day. Okay? We see this order block here as well, right? Again, we have SMT at these highs, so, and we also have it on that weekly time frame. So we got 2 layers of SMT, so we want to see what takes place. NASDAQ being the weaker of the 3, if we're going to consider the SMT. But yeah, so if this is going to go higher, we don't want to see it spend too much time going lower at this point. Last line of defense for me is going to be obviously this swing low here, right? Because if that swing low is not going to be respected, we have the inversion fair value gap, we have that weekly bullish order block, and we have that SMT, or we have the weekly 2-week inversion fair value gap here, okay, right here. And then we also have the inversion fair value gap. We have a bunch of new week opening gaps as well that we should be able to see price hold above this level. But if we slam lower and break through this swing low here, that's multiple PD arrays to the downside taken off the heels of an SMT. And if we see the bonds go lower as a result of taking this high, then that is the environment that allows us to believe price may not continue to go higher in the indices. But until that is justified, we're going to continue to hold on to the narrative that is clearly still at play, which is bullish indices, bullish currencies, bearish DXY, based on our analysis process. Okay, and it's very, hopefully it's very self-explanatory. I hope I have done a good job explaining this. I have explained it for literally weeks at this point, so I hope it's clear. Again, if you guys have any questions or anything, definitely let me know. But this week should be pretty fun, you know what I mean? It should be interesting, given NFP is coming, given the fact that it's a new week, given the fact that it's also going into a new month off the heels of a new quarter. So yeah, we'll see what happens, right? If it does drop lower, then obviously that may end up leading to a quarterly shift, which we will identify if and when that does take place, if it does take place. But again, for now, just to recap the overall narrative I'm looking for across the board, I'm looking for bearish DXY because of what the bonds and yields are showing. I'm looking for bullish indices and bullish currencies because of the analysis that we just did. So before we put a ribbon on this, I'm going to pull up seasonal influences again, and we're going to look at the chart for that, as I do with my private community, because I know a lot of you guys are going to watch this as well. Where is it at? All right, seasonal. Okay, it's silver. So here is the S&P. So going into after September, going into October, right? You can see that there's a seasonal low that forms. Okay, and then it goes higher. It has an interest to go bullish. So that is justifying our analysis we did, assuming potentially continued bullishness in the indices. Okay, and then obviously bearishness in the DXY, which we'll look at right now as well. Okay, you see a low that formed here, right here, in September, that has led the price continuously marching higher. Okay, and if you look at the seasonal chart, if you rewind it real quick, you go back and see exactly how accurate this specific analysis tool can be for you and how effective it's been for literally the last couple of months. And, you know, set aside the previous month, you could see for months this has been a very helpful tool. Okay, so this is October here. You can see that this has a seasonal high that forms, and then it has an interest to go bearish for October. Okay, oops, we're a little bit too far in October. Okay, so again, you can see the high here. We go back to the S&P chart. You can see the low here that forms in October. So it goes higher, higher there after setting a low. Then it goes, oh, whoops. And then it goes bearish on the DXY. Okay, so this all justifies exactly what it is that we have done this morning. Let me go find the T bonds, which is the T note, which the T note is this market that influences the indices. So let's go see if that also confirms our bullish indices and bearish DXY. Okay, so let's drag that over. Okay, so we do have a very interesting, kind of sloppy view. It does look like October starts bearish, but then ends up going bullish, right, as October matures. So that's something we're going to keep in mind. We'll see if that translates. But again, there's overwhelming evidence, in my opinion, based on the things that we've just done an analysis on, that we should continue, unless something changes, to see indices go higher, currencies go lower. Currencies go higher, DXY going lower. And if all of that stays intact, we will continue to hold on to that narrative unless something changes. And I will be the first one to try to tell y'all once that does take place. All right. So yeah, with that being said, you guys, appreciate you guys that have hopped on. Hope you guys have gotten value. Definitely let me know in the comments if you have any topics you want me to talk about. Like the video if you did get value. Definitely subscribe if you haven't already. Again, this channel is for you guys and to see you guys succeed. Hope it wasn't too boring, but if it was, there's nothing I can really do about that. But yeah, I hope you guys have had a safe past couple months. I hope you guys were able to thrive last week. I know it was a little bit difficult for some people, but nonetheless, there's a method to the madness. And if the longer you spend time here, the longer you spend time studying ICT concepts, the better you will become. And again, I'm here to act as a resource if any of you guys need help. If you guys do want one-on-one mentorship, I offer that as well, or you want to be a part of our private community, which has been doing phenomenally, and all my students can vouch for that as well. If you're interested in that, I have information on that down in the comments. In the bio. But yeah, if you have questions, you could DM me or leave them in the comments below each of my videos. But yeah, with that being said, you guys, thank you for your attendance today. I hope you guys got value. Let me know if you have any questions, and I will see y'all on the next one.